What's up, investors? It's the Russian dude. So it looks like that the Federal Reserve itself, they did make a statement that most likely they will postpone the rate cuts until 2025. So let's talk about what's going on right now. First of all, according to one of the representatives of the Federal Reserve, Neil Kashkari, he did mention that maybe we're only gonna see one rate cut by the end of this year, 2024, and this one might happen in December. Obviously, the very last month of the year. And guys, if you've been watching my videos, you already know exactly why, the reasons why the Federal Reserve cannot just literally cut the rates right now and help the economy. The situation is not that easy. A lot of senators, a lot of representatives of the government, they do already get desperate and they already write an open letter to the Federal Reserve, not even asking but demanding to cut the rates as soon as possible. Such senators, for example, are Elizabeth Warren and John Hickenlooper. And I'm not gonna say that they do not understand the consequences of preliminary premature interest rate cuts. To be honest, I do believe that they know what's gonna happen, but the priority for them are the good headlines. The priority for them is to calm down the American people, to get potentially some new votes in the next, whenever it happens, elections, just to make it look like for, once again, American people that these are the senators from the people. Because the economy wants lower interest rates, this will make, for example, mortgages more affordable. Well, this is the only thing that people care about. They do not want to go into details what are the consequences, they want the immediate solution right now. They want their mortgage payments lower than they are right now. But yes, in the very basic understanding, one of the reasons why interest rate cuts cannot happen right now, because the inflation is still way above target. It is not just above target, it is also extremely sticky and barely budging. Such extraordinary measures that the Federal Reserve is taking right now, they yield very minimal results, and according to some estimations, the inflation can finally hit its target of approximately 2% only in 2026. That is why interest rate cuts are nowhere near close at this very moment. And so, as a result of this, according to the Federal Reserve Governor Michelle Bowman, she does claim that yes, at this very moment we're not even discussing reducing the interest rates right now, we're gonna follow the situation with the inflation. If it stops budging, if it even starts to go up once again in the worst case scenario, she will be among the very first ones to claim to make statement for interest rate hikes once again. And personally, she did claim herself she does not see any single interest rate cuts in 2024, the earliest they can happen in 2025. This is not just some 9-to-5 Federal Reserve employee. Once again, this person is the governor of the Federal Reserve, so her opinions, they do matter, obviously, to say the least. But if you've been watching my videos, guys, you already know that I also in the very same camp of people who do not believe that the interest rate cuts will happen this year, unlike approximately 81% of investors and traders, they still believe that the rate cuts will happen. I do agree that maybe, just in the best case scenario, there will be only one of them, but most likely there will be delayed until 2025. But in case there is an interest rate cut this year, yes, I do fully agree with Neil Kashkari, most likely it will happen in December of 2024, because this is the holiday season, people are in cheerful mood, they once again do not want to see any bad headlines, they want something positive for the Christmas, for the New Year and the holidays moving forward. That is why yes, we might see an interest rate cut, though it will be a very minimal one, and after this we won't see any rate cuts for a very long time. And in the second part of the video, let's talk about the situation with Nvidia, because it started to rapidly lose its value literally several days straight. So, to begin with, top 5 companies within the S&P 500 index now represent already 27% of this index. The rest 495 companies are responsible for 73%. Which is even ridiculous to even think about it. It literally defeats the entire purpose of having the index itself. As one of you guys has mentioned in the comments, fully agree with this statement. And as you can see from this graph, this is the highest allocation just to 5 companies. pretty much almost in the entire history of the index. In the last 3 out of 4 trading days, as you can see from this graph, Nvidia lost 13% of its value. And this taking into consideration very good news. The stock split, which made stock shares of the company more affordable to regular investors, and even Nvidia becoming the #1 in terms of market capitalization company. All good news all around, yet the stock declined. However, on Tuesday, June 26th, Nvidia gained back approximately 6-7% in the share price. But during these 3 days of never-ending decline, Nvidia lost approximately $430 billion in market capitalization. Just think about it, almost $500 billion. And if you do take a look at this next graph, which compares the price performance of Nvidia and Cisco during the dot-com bubble, we see some very alarming similarities. We also talked about this particular topic several videos ago, that yes, right now the situation is not as crazy as during the dot-com bubble. It is no longer enough just to put .com in the name of your company and your share prices grow exponentially. So no, the situation is not exactly the same right now, but still companies are overvalued. Talking about the very first point from this chapter of the video, 27% of S&P 500 index represented by only 5 companies. So long story short, as soon as these 5 companies start declining, which is a very real possibility, you already saw Nvidia losing 13% in literally 3 days, they can and they will drag the entire S&P 500 index with them, which can and most likely also will cause a panic on the stock market, which leads to even more selling pressure. And so Nvidia executives perfectly understand this situation. They do most likely understand at the same time that the valuation of the Nvidia company shares is a little bit way above what its real valuation should be. So as you can see from this next table, a lot of top management and executives, they were selling their shares at the very top, locking in some very nice bonuses and profits. And guys, please, as always, remember that if it is too good to be true, probably it isn't. So just always be careful about investing your money in the stock market and do your own due diligence. And if you did like this video and it was informative, please like this video, subscribe to my channel, and see you tomorrow.